This program is brought to you by realestate.com.au. With more homes for sale than anywhere else, realestate.com.au is Australia's #1 address in property.
Thanks for being with us here on Business Now. Now, if you've got a home, listen up, because despite higher inflation and the threat of higher interest rates, there's more evidence of the resilience of our housing markets. The REA PropTrack Home Index is out today. It shows national home prices rose just by a little in July, but July is typically the slowest month for growth throughout the year. So as the idea of interest rate rises starts to fade, we have to ask if this is as bad as it gets. Well, Anne Flaherty is an economist at the REA Group who's helped put these together and joins me now. Anne, many thanks for your time. I mean, it does show, even in the face of all that talk about interest rate rises, these housing markets did not fall apart one little bit, did they?
The resilience of Australian house prices has never been more evident than in the last year, really. We know that the cost of living crisis is causing a lot of harm. We know that interest rates are still very high. But despite that, we are continuing to see home prices rise across the country. Compared to 12 months ago, they're sitting about 6.6% higher.
OK, so 6.6% higher is significantly higher than the inflation rate has been over the past year. We can see it there. 6.28% is, in fact, across the country. The capital cities are even a little better than that again. The one standout here, to me, is the Melbourne market. Have a look at this. On an annual basis, while Brisbane's up by 13%, while Adelaide's up by 14%, Perth is up 22%, Melbourne has gone backwards. And that really is indicative about taxes, about the state of the economy there, isn't it?
Yeah, look, if there's one place it's great to be a buyer right now, it's here in Victoria. What we're seeing is, in addition to what you've just mentioned, there's actually a very high supply of homes on the market in Melbourne right now for what we normally see for the time of year. Comparing June of this year to June of last year, there are actually 23% more homes out there. And this is one of the key reasons why we haven't seen the level of home price growth in Melbourne that we're seeing in other markets, in particular Perth, Adelaide and Brisbane.
Well, the staggering thing for me is that the median house price in Canberra, the median house price in Brisbane is now significantly higher than it is in Melbourne. The median house price in Melbourne now $800,000 versus around $850,000 in Canberra and or Brisbane. That almost defies a bit of logic, but it says everything about supply and demand, doesn't it?
That's exactly right. It all comes down to the number of buyers out there looking versus the number of homes for sale. And we know that really, that is the key driver of home prices at the moment. Interestingly, we're actually seeing Adelaide starting to gain momentum on Melbourne. At the moment, home prices in Adelaide are down only about $35,000 below the Melbourne median. So it's actually quite astonishing to think that Melbourne is now one of our more affordable markets.
That being the case, it's interesting to note the Hobart prices are about 9 or 10% off their all-time highs. Melbourne prices are about 4% off their all-time highs. But if you then go to Sydney, Brisbane, Adelaide and Perth, all at all-time highs, and Perth, as we say, up by 22% in the past year, it's flown off the back of all the natural resources and the fact it was originally, going back 3 or 4 years, the cheapest market in Australia.
Well, Perth has made a remarkable recovery. For a long time there, post the previous mining boom, we saw home prices really in the doldrums in Perth, going backwards for quite a long period. Now, of course, they've surged to new record highs. And actually, when we look at population growth in Perth versus the supply of new housing, Perth is actually seeing the biggest undersupply of housing. And that's really the number one driver of the fact that we've seen prices there rise more rapidly than anywhere else in the country.
So tell me, is there much difference between the value of houses right now and the value of apartments? Because traditionally, the house value has outperformed significantly the apartment market over the past few years.
That is what we normally see. At the moment, we're actually seeing house prices and unit prices keep pace with each other. What's quite interesting is in Melbourne's market, we're actually seeing units outperform a little more. And actually, I think if we look over the next few years, we might have a market in which units outperform more generally. What we're seeing is with a lot of the crises that we're seeing in the construction sector, it's actually units that are seeing the biggest slowdown in development right now, which means that we're going to have a relatively greater undersupply of units. So it's a lot of this more affordable, smaller housing stock, I think, that's going to be very undersupplied over the next few years. which actually bodes well for prices for those kinds of properties.
And just very quickly, if really this talk about interest rate rises is now gone, and really the next move is likely to be down, Commonwealth Bank says it could be November, what happens to these markets?
All else equal, we know that lower interest rates push prices up. The reality is that since interest rates started increasing in 2022, the typical home buyer can borrow about 34% less. Now, the fact that that has happened yet, property prices are sitting at record highs around the country, really shows the strength of that demand relative to supply. So if we were to see interest rates come down, prices will go up.
I'll tell you what, Anne Flaherty, good to have you in the program as always. Many thanks for your time.